Hello and welcome to the 2020 annual review. A lot happened in 2020, so let's take a look at what happened and then maybe some thoughts about what might happen for 2021. So 2020 was a crazy year to say the least. I mean, late 2019 when the news articles were coming out about COVID-19 in Wuhan, I don't think anybody expected it to be as big and as crazy as it came, as what happened. And really in March, when the WHO declared it as a pandemic, it took everybody by surprise, including the markets. So that's why we saw one of the biggest declines that we've ever seen. We saw in just 23 days, we saw the S&P 500 drop 33.9%. That's nuts. But really, just as quickly as it happened, we almost saw this crazy recovery. So let's take a look at what happened. The first major impact that we saw from COVID in a real sense was what happened with oil. So when oil was no longer in demand and everybody had to take delivery of these oil futures, we saw oil futures turn negative for the first time ever. If you want to know more about how that works, I did send out an email about it, so you can email me and I'll forward you a copy of it. But really, that sent ripples throughout the markets because you're thinking to yourselves, if this is the beginning, what's to come? So after oil, we didn't really know what could happen. But what we saw was interest rates slashed to almost zero. We saw governments buying back assets at a rate that they'd never done before. And what this meant was it created a sense of security in the markets. It meant it allowed for a recovery of, I think it was 70.2% up from its low for the S&P 500 in 2020. That's insane. But what it did highlight was the K-shaped recovery that you hear about in the news, where some companies that are deemed as COVID immune recover so strongly versus other companies that were drastically affected by it. In fact, it's telling because despite the S&P 500 performing so well in 2020, more than 1/3 of the companies in that still returned negative returns. And that really is a testament to the power of the digital gigantic companies out there, the FAANG companies like Facebook, Apple, Google. And then to top 2020 off, we had the vaccine. And everybody was holding their breath for vaccine news. And that's really going to be the telltale of 2021 and how that holds out. There'll be some parts of the economy that will recover very nicely. And there's some parts of the economy that might be in a little bit of trouble, and we'll still have to see how that pans out. What about the future? What do we think? Well, my guess is obviously as good as yours, but there are some indications as to what we could potentially see. So one of these areas of concern for me is the bond market. So when interest rates go down and like they did, we see a positive return for bonds. And bonds and interest rates have an inverse relationship. If you want to learn more about that, I have another video on that you can go watch. But what that means is as interest rates inevitably come up over the next few years, that bond returns are negatively affected by that. And that's just a mathematical truth. So how that is managed and how we see that impact client portfolios, it doesn't look too good for bonds. So if bonds are in the portfolio, in my opinion, they better have a job. The next thing we see, obviously a big one, is Biden's presidency. So last year, the whole running up is very green agenda, and that means that a lot of money is already being poured into the green future. And what that means is that, I mean, last year, green type investments did very, very well. But my concern, I guess, in that area is at what point does green energy just become energy? At what point does electric vehicles just become vehicles? And what we've seen as these transitions happen throughout humanity is that the valuation on new fancy companies becomes more realistic. And currently the valuation assigned to these companies is very speculative. Don't get me wrong, I really like Tesla as a company. I think they've endured a lot to get through where they were to where they are now. But the valuation assigned to them is absurd. They have to do a lot to meet this valuation. And my concern is that at what point does Tesla become a normal company? If it's a car company, at what point is it just a car company instead of this special electric vehicle car company. Thirdly, a weaker US dollar. There's a lot of analysts out there that expect a weaker US dollar throughout 2021. And what that means for the global economy is normally it makes it easier for businesses to do business from countries outside of the US. So think of like the emerging markets. So China, South Korea, India, Japan, Brazil, countries like this, they tend to benefit from a weaker US dollar. So overall, what we see in 2020 was a lot of firsts. But most importantly, almost, it shows that there's going to probably be a big jump in towards the digitalization of the global economy. It also shows that there are still a lot more scientific leaps that we have. We saw a vaccine produced in record time. That's never been done before. And the scientific advances from going through that process is going to be felt for the next 20, 30, 40 years. There's a lot of positives that came out of COVID despite the very negative thing of going through a pandemic as a human race. That was 2020. And 2020 had its own challenges, and 2021 will have its own challenges as well. If there's any lessons that we really need to learn and take from that, though, is first of all that the markets will do it at once. There's no way to try to time it perfectly. So staying the course is the best way, and has always been the best way to invest in markets. And second of all, we see a theme throughout 2021 and the future coming years. A very green initiative from Biden will push that further, but we've already seen a transition in Europe towards greener, more sustainable type of companies. And that with the emphasis being put so much more on there, it's going to become the norm to invest portfolios according to these type of themes. The ESG, or the environmental social governance theme, something that I've put into my portfolios for a very long time, is now becoming more mainstream. In fact, I believe there's more money in pension funds that follow that theme than don't now in Canada, which is phenomenal. It's a good thing for everybody. That companies that are socially responsible get rewarded for that. So that's really been the theme of 2020, and we expect it to follow into 2021. Thanks for watching. As always, if you have any questions or concerns, reach out to me, let me know. And as always, any feedback is warmly welcomed. Thank you. Bye.